See, that is a record high.
Joining us now is CEO of Wealth Management Group, Craig Bolanos. Craig, thanks for joining us.
Larry, Robin, good to be with you. Big movement in the stock market overnight and just after the opening bell this morning.
Is it all related to the election?
I think it is. A lot of people ask, is this a bullish game changer? And what I tell everybody is, no. Markets are already up sizably year to date. But why markets are celebrating is it looks like it's most likely, based on the electoral map, the Senate, and what might be the House, that there's going to be a full extension of the Tax Cut and Jobs Act. And that's probably going to keep this market rally alive through the end of the year.
What are your thoughts about his promise of tariffs, how that would affect the economy?
Well, I think that's one of the two risks. We're seeing a risk in Treasury yields already, as there could be an expansion of the deficit in the budget. And, Republican leaders are going to need to address that. And as far as trade wars go, and specifically tariffs, nobody wants a trade war. What I pay attention to very clearly is we have legal treaties with a lot of our trading partners, Mexico, et cetera, and those can't be changed just through executive authority. But on the China front, if the burden of proof is proven by the president, he does have some broader powers, and I think we could see some increased volatility on that in 2025. And some of the import stocks are down this morning, clearly showing that that's a potential risk.
I think people are always worried when it goes up so high. When is it coming down?
Robin, you and I have talked about this before. There's an old slogan on Wall Street: new highs tend to make new highs. And again, the trend is your friend. And so far in 2024, lots of people have come together and engineered a soft landing. And if we pay attention to those two slogans, the trend is your friend and new highs tend to make new highs, I think this remains a good environment for long-term investors to keep on grinding money into that 401k plan.
How much do you worry that the growing deficit will impact interest rates and cause inflation again?
You know what? Reinflation, Larry, boy, that's a very prospective question and query to make, because that's a danger. When I made my reference earlier to Treasury yields increasing on the prominence of what could be a Republican sweep and a repeat of 2016, I think you're going to see mortgage rates right now start backing up as the 10-year Treasury, which influences mortgages, is already climbing. And the Federal Reserve is going to have to be very careful on how they adjust their policy, given there could be some additional fiscal stimulus, because it's going to be an easier pathway for the to-be elected president to pass his agenda, which will likely be, an increase in spending.
Do you also have a bear mural behind you in your office?
I think it's a bull creeping out around your shoulder.
There. Do you have a bear as well?
Yeah, we do. There is a bull and a bear, but right now the bull is singing its praises with the Dow rallying 1,300 points the day after the election. And Larry, a big part of it is everybody know who won. I think Wall Street was braced for a repeat of 24 years ago when we had hanging chads. That clearly turned out not to be the case.
Yeah. All right, Craig, thanks so much for joining us. Appreciate it.
Yeah, fantastic leather sofa as well.
Right?
Nice job,
nice
Craig.
Lobby.
He should be doing interior decorating.
Yeah,
what is he doing wasting
not?
his time making money in the markets?
Thanks,
He's got
Craig.
a flair.